Hey everybody, Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of YFP Planning's fee-only certified financial planners. Before we jump into today's question, I want to give a shout out to YFP Planning's incredible team that makes this segment possible. YFP Planning offers fee-only comprehensive financial planning that is customized to the pharmacy professional. You can learn more and book a free discovery call by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Melanie in Orlando, Florida.
Hello, my name is Melanie. I'm calling from Orlando, Florida, and I had a question about investment options for children. My daughter has some money from a piggy bank that she's looking to cash in and invest. We already have a Florida 529 for her, so we're looking for other options.
Thank you, Melanie, for submitting your question to be featured on the show. Tim, great timing. We were actually just talking last week about wanting to spend more time on this topic as it relates to savings and investing for kids, teaching kids about money, all the financial conversations that surround children and money. So what are your thoughts here on Melanie's question?
Yeah, it's definitely a topic. Selfishly, I want to kind of flesh out for myself, my wife and I with our kids, as they get older. But I just think it's something that, like, if you can build some good money scripts for your kids, when they're younger, it'll benefit everyone. So love this topic, and we're definitely going to be putting more content out in the future. I think there's a couple of buckets, that we can potentially look at with regard to kids and finances. So I think the one that's often looked at first is kind of like the check-in savings account. Grandma writes you a check for your birthday. You might put in a savings account, or if it's cash money, like Melanie said, it's like a piggy. There's also the opportunity to use things like CDs. So I know, Tim, you have some accounts for your kids. We have accounts for our kids that are on the savings account side that get a high yield interest, but they don't really have any type of control of that. We kind of just use that to fund things like sports and that type of stuff. So, but CDs could be another look. Another thing that we've talked about in the past, Tim, are things like I-bonds. So currently, I-bonds are paying 6.89% for those issued between November 1, 2022 to April 30th, 2023. So this is another one, like right now, because of where inflation is, it's like, hey, that's kind of close to what you're going to get in the market over, 10 years. So why not do that and take very little risk? But we know that, inflation will ebb and flow. So, there'll be, some changes that. So I think, that those are kind of the cash and cash-like equivalents that I would be looking at. I think from the investment side of things, there's a few things that we can look at here. One that was mentioned is the 529 account. And I do think that I would put some respect on the 529 account's name, because I think of a lot of the changes that they're making. Again, when they came out, it was more of a narrow view of like, what could you use this for? So, the overarching theme is like, you can use this for qualified education expenses, which has kind of been expanded to things like trade schools. So there are tax benefits. Usually it's a state deduction. In Florida, obviously you don't have that. But the big one that I think is on the table now with the Secure Act 2.0 is that you can roll that over to, an IRA in the future, a Roth IRA in the future. So to me, that makes that account a lot more valuable, especially, even if your kid doesn't necessarily go into higher ed. And the other thing is, and that's nice about the 529, Tim, is that it does allow you to change beneficiaries. So if Olivia's like, hey, I don't want to go to college, I can basically change that up for Liam or kiddo number 3, and then, kind of move on with my life. You can, grandkids, that type of thing. So I think a lot of people think like, oh, 529, I'm never going to get that out. But in reality, I think there are, and I think there will continue to be pathways to use that money. And the nice thing about that is that it grows, kind of that tax-free, inside of that account, which is nice. The other one that I would look at is something like a Roth IRA. Now, the big caveat here, you can only really use this unless your kids have like earned income. So, they're doing some, and this is something that, like, as our kids get older, I want to make sure that we can figure out a way to kind of give them work inside of YFP. So we can, obviously they can earn money, but then they can start, funding some of their investment accounts with that earned income. For a lot of people, especially if they're younger kids, that's going to be off the table. But something that, as you get into like preteen and teen years, might be something that we can do. The last bucket is really what we would call like a brokerage or a taxable account. So you can set this up jointly. So my wife and I have a joint brokerage account for a particular purpose. But you typically can't do this with a minor. And I'm not sure if you want to do this with a minor, but you can't do this with a minor, essentially because, if I put $10,000 into an account with Olivia, then technically she can go to the bank with her ID and take that out. Now, they're not going to let her do that, but they're typically not going to allow you to, set up a brokerage account with a minor. So the alternative to that is what is called the UGMA or the UTMA. So the UGMA, which stands for Uniform Gifts to Minors Act, or the Uniform Transfers to Minors Act. These are accounts, these are custodial accounts. So I am the custodian to like Olivia and Liam's account. So it allows a minor to hold things like stocks, bonds, cash, property, and real estate. That is the UTMA. The UGMA is very similar, except that you can't hold property and real estate. So these are accounts that essentially you put the money in for the benefit of that minor. And typically that minor will gain access to that account and be able to, withdraw it at the age of majority that is determined by the state that you live in. So it could be, it's usually between 18 or 21. So when you're setting up this account, you really have to determine, okay, do I think that my child is going to make, smart decisions with this money at 18 or 21? And if the answer is no, then what you might want to do is just invest the money in a, if you're not going to go through a 529 or something like that, you might want to invest it in a taxable account in your name only, and then gift that later in life to the, your 18 or 24-year-old or whatever you think that, the money would be used for a good cause. So, and that's the big thing here, Tim, is like, unlike a 529 or a Roth IRA, 529 used for qualified education expenses, a Roth IRA used for retirement, this can really be used for whatever purpose. But there aren't any really tax benefits. So you do have capital gains tax. So if you buy a stock at X and it sells for X plus 50%, you're paying capital gains tax on that 50% gain. So, and then the other thing to consider is that any withdrawal that you make, even, before they reach the age of majority, that must be for the direct benefit of that minor. And you can withdraw for any reason without penalties. However, the income on that account is taxable to the child and may be taxed at the parent's tax rate if the child's unearned income exceeds $1,200 for the year. So what the IRS is trying to do is for parents not to kind of hide investment gains in a child's account. So that's kind of the loophole there. So I do have these accounts for our kids, ourselves. I would say, Tim, that this is kind of more for right now with Olivia being 8. This is more of kind of a conceptual thing where I said, hey, Daddy put X amount of dollars, so she can see on my app, like the name, her name, and she can see it go up and down. And she's wondering, like, because I put $50 in recently, and she's like, bro, it's got like went down, like, what's up? The market's been,
where's my money?
She's like, don't lose my money. And I'm like, all right, like, so I'm trying to explain to her like what investing is and that type of thing. So right now for me, it's more of a conversation starter. We don't really even talk much about the 529s because I don't want to necessarily, like, we're still kind of framing our own scripts for that as she gets to college age, and we want to make sure that she's working her tail off so she can get scholarships and things like that. So I think like all of these are good avenues. I think it's just determining what is the best path for you and your kiddo. I do think that all things being equal, I would probably, and again, we're in a state that has, state income tax. So the 529 for me is I think we get $4,000 in a state deduction for each beneficiary or each child. So that's potentially $8,000 for our 2 kids, $8,000 that we can get a deduction. And I do think that unfortunately, we're going to be, spending a good chunk of that money in the future on education, unless it really starts to cool off. So that's kind of where we're at, Tim, as a family, in terms of the investments for our kids, is really trying to, use the 529. When they start making money, I'm going to introduce the Roth IRA. But then the brokerage is kind of more right now for us, kind of a conceptual, hey, this is kind of what investing looks like. We're going to put money in, we're going to see it grow up. It's going to go up and down. And, over the long term, it should go up. So But I think it is good because I think back in the day, I don't know about you, Tim, but like, you get like bonds from like grandma or whatever. And it's like, all right, this
The
$20
double
bond is not,
E's.
it's now worth X,
Yeah.
which is good. I mean, that's good. But like, again, if you have younger children, I think the idea of putting money into an investment and let the market do what it does, which is typically return, 10% adjusted down for inflation is 7%, year over year, I think is a powerful thing to do, even when your child is young, and then start introducing those concepts to them as they get a little bit older.
Tim, I think this is a great example, and shout out to Melanie for sending this question of you start to peel back the layers of the onion, and you mentioned several different options, but I think what I really heard there is taking a step back to say, what's the potential purpose here? Is this about teaching? Is this about we're saving for way off into the future? You alluded to like the Roth or even the 529, of course, with college. Obviously, Melanie here looking for something other than the 529. Is it a, something 5-10 years into the future? So I've got a 8, 9, 10-year-old, we're starting to save up for a car or these bigger expenses, but all of those are going to factor into what might be the potential best vehicle, right? What's the purpose? What are we trying to accomplish here? And then obviously the vehicles you mentioned all have different pros, cons, tax considerations, timelines, penalties if we withdraw, and so forth. The other thing I heard you say, which is really important, I think, as it relates to the teaching side for kids, is what type of control, if any, are we wanting the child to have, which of course depends upon age and what you're trying to accomplish. And I'm seeing this right now in real hand where I feel like my 11-year-old, soon to be 12, like he's itching for that responsibility of independence and starting to make some of those decisions where it's not, hey, I need to go to mom and dad all the time, to get money. And the sandbox might be small to play in, but that factor at that age, might be very different than, for example, my 8-year-old or our, 3 or 4-year-old, like very basic concepts, right? I want them to see the account. I've got full control. We're just talking about principles, getting them thinking about, money and identifying with, how things may grow or change, or, hey, we've got money in the bank and it might go up, it might go down. I mean, you're more on that teaching showing. So again, I think that child control piece is really important because that also is going to define potentially what tool and pathway you might go, right?
Yeah. And we've talked about this, Tim. So I know there's some apps that you brought up the Busy Kid app, which I looked at, and it kind of gets
using
into
it. Yeah.
So I looked at some of the ratings on the app, and it was like 3.5. It didn't look that good. And there were some negative comments. So I started I went down this whole path of like paralysis by analysis. Cause like I was going to do it with you. And I'm like, well, this banking for teens and kids, it has a 4.6 rating. Yep. This other one called Copper, 4.9, Go Henry, 4.6.
Green Light.
So so I'm like, I almost want to, I want to jump in, but I'm like, I'm wondering if like, you do Busy Kids and I do something else, but
yeah,
it does bring up. So I've read this book, I think twice. It's called The Opposite of Spoiled: Raising Kids Who Are Grounded, Generous, and Smart About Money by Ron Lieber. And there's a few other books that I have kind of in my queue that I want to read that kind of target, kind of some of these money lessons for kids that I want to kind of read and start incorporating. I think the big thing that I took away from The Opposite of Spoiled is, he kind of, which a lot of these apps kind of go against the grain, is like, you should almost like universal, like basic income. Like you should get an allowance regardless of if like you're doing chores or not. So it really should be one of the things that he says is like, so if Olivia goes and cleans the bathroom, like we really shouldn't reward that like monetarily. She should just have a steady whatever per dollar a week that she gets because she's part of the household. It's just, this is what we do. But a lot of these apps are set up as like, hey, if you go do this, then you'll get, you're going to get paid out.
Which is interesting, Tim, too. I think there's I'm thinking about Smart Money, Smart Kids as one who kind of argues the opposite, which I think is a reminder of taking that step back and kind of understanding like, what are the options? What's the philosophy? What are we trying to accomplish? Right. Because I think the point you're making, which is a really good one, like if you jump into the tool, each tool might look different, will look different. And that may or may not be in alignment with what your philosophy is, right? So Tim, if you're using a tool where Olivia's getting paid for a task or a chore and you're like, nah, I don't really want that, like that's not going to jive.
Yeah, exactly. So that it kind of got me thinking a little bit more broadly about, what is, and it's funny because I remember going down this path with her, and she was probably too young. This might have been when she was like 6. And I was kind of like, we had jars for like save, spend, give. And it was just a little bit too early for her.
Yeah.
But it's definitely something that she's like gotten a little bit older that we need to like revisit and start, talking about more. Because I do think like there has been some things, Tim, that have come out of her mouth, and I'm like, what? That's not like how we operate around here. Or like, oh, like this is broken, I'll just get another one. I'm like, that costs money. Or, I'm like the dad that's like, who touched the thermostat, or like, why are the lights always on? And like, they don't, I think, and it's funny because like Tim, back in the day, like my first job, I worked at a restaurant. Like I was kind of paid like cash, like it's like paper cash.
Yeah.
So I wonder if you've always operated, financially, like electronically, like we do now, like, everything is, you don't even like deal with paper money really. Like, does that change does it make it any less real? I guess is my question.
Yeah.
And these are some of the things that I'm trying to like, I think there is something cool about having a bank account and going to the bank and like depositing money and kind of like having some of those experiences with money, because it's almost like, it's almost like conceptual that, money will always be there, which I do think that is the case. Like if you know what you're doing, but like, that's one of the things that I, as Olivia's gotten a little bit older, some of the things that have come out of her mouth, I'm like, all right, we need to like lock this down. So it's great. It's a great question, but it's definitely something that, I want to explore a little bit more selfishly as my kids have gotten older, and just how to have some good conversations around, investments, just how we spend, how we save, how we give, etc.
Yeah, we'd love to hear from the community. We know we've got many folks out there that are in the thick of this, like Tim and I are with our kids, or maybe have been through this phase of life. We'd love to hear your wisdom, people with younger kids that are anticipating this into the future. So shoot us an email, info@yourfinancialpharmacist.com. We'd love to hear from you. You can also share in our Facebook group, what's worked for you? What are the systems you're implementing when it comes to teaching kids about money? We'll also link in the show notes, in addition to the 2 books that Tim and I mentioned, we'll link to a previous episode I did with Dylan Redling and Allison Tom. That was episode 202, where we talked about their book, Investing for Kids, How to Save, Invest, and Grow Money. Great resource, lots of different ideas about investing, entrepreneurship, teaching them some of the basics of business as well. And so you can check out that episode and that resource if you're interested. Melanie, thanks again for taking time to submit your question. As a small thank you, we're going to be sending you a super comfy YFP t-shirt. And for those listening, we'd love to hear from you with your question. You can send us an email, info@yourfinancialpharmacist.com. You can also record your question by going to yourfinancialpharmacist.com/ask-YFP. And as we wrap up today's episode, an important reminder that the content provided on this show is for informational purposes only, is not intended to provide, and should not be relied on for investment or any other advice. For more information on this, you can visit yourfinancialpharmacist.com/disclaimer. Thanks for listening, and have a great rest of your week.